All right, all right, all right, all right, all right. Ladies and gentlemen, good day, good afternoon, from wherever you're joining from. Shout out to everybody in the building. This is another edition of Just Markets Live with your fave, Mr. YC, sir. So we're going into what looks like the third or the fourth week of the war. I think it's day 30, if I'm not mistaken, of what Donald Trump calls the military operation. He doesn't want to call it a war because I don't like it when he calls it a war because it's illegal. All right. But I'm gonna unpack all the ramifications and all the things that we've missed out on since our last conversation. What's changed in the ether? What are we seeing differently in as far as escalations? Are we seeing de-escalations? Are they negotiating? Is that just propaganda? There's a lot to unpack, ladies and gentlemen. Alas, you're in the best place for it because time is money. And the money that you want to make is gonna happen in this time. You feel me? So, welcome to another edition of Just Markets Live. You chilling with Mr. YC, riding shotgun with the best market analyst in the city. You feel me? And I think we just need to lay down the groundwork before I even begin. Because, ladies and gentlemen, what I'm about to discuss with you is not financial advice. Okay? Do not construe it as financial advice. I'm not here to tell you what to do with your money. I'm not here to tell you what to do with your coins. I'm here to point you in the right direction by unpacking the noise from the signal. You feel me? That's what I'm about to do. I'm about to cook. You feel me? So if you're trading gold, if you're trading anything that's denominated or trading against the US dollar, then this stream is for you today. And without further ado, let's skip the foreplay. All right? Let's get straight into it. No foreplay. What I'd like you to do for me though, everybody in the chat, let me know where you are watching from. Do we have Nigeria in the building? Do we have Kenya in the building? Do we have South Africa in the building? Do we have Mozambique in the building? Do we have Lesotho in the building? Because usually Kenya usually dominates the stream. I can't even lie. All right. First things first, ladies and gentlemen, good evening to everybody. When I walked into the office this morning looking at my screen, I thought I understood the Iran story. And most of you probably did think that you did too. But as the day unfolded, one thing became very, very clear, ladies and gentlemen. This is no longer a geopolitical headline, all right? It's a full-blown macro driver. That's what we're trading. It's not just about the bombs, it's about the implications on monetary policy from the bombs, all right? Because we're dealing with an inflation story here. The fact that oil is subdued has completely taken the chink out of the armor of gold. We're supposed to be sitting in an environment where gold is supposed to be soaring because of the geopolitical instability, because of the safe haven properties, but divergence. All right. We're seeing a complete reversal or an inversion, rather, of that dynamic. The more the war escalates, the lower gold is going to push because of the inflation that is going to be caused by the oil, the surge in oil prices. You feel me? So let's talk about what changed today in the Iran story. So, as you can see, I got some headlines on screen. We've got a few articles that we're looking at. And through today's session, ladies and gentlemen, it's clear to see that tensions around the Strait of Hormuz are still remaining elevated with no meaningful signs of de-escalation, all right? Ceasefire expectations, zero, still fragile, still political, still not priced in with conviction. And we can see that reflected in the price of oil. So here's what I'm going to say. If the market believed Donald Trump's tweets or Donald Trump's statements, it would be reflected in the price of oil. But what we're seeing is that the market is calling cap on Trump, cap on all of Trump's tweets, all right? And that's why we're still seeing escalation still priced in. You can't simultaneously say with one mouth that we're de-escalating, we're negotiating, in the same sentence, troops are on their way. More than 10,000 troops. Come on, what are we doing here? What are we doing here, guys? Like, I've never seen this level of gaslighting in my life. All right. I thought I'd seen it all with Joe Biden's presidency when they're telling us that Joe Biden is fit as a fiddle. He's mentally sharp. He's there. That was epic levels of gaslighting. All right. We saw that. They tried to gaslight us. They told us Joe Biden was there. Joe Biden didn't even know he was president. Joe Biden didn't even know what day of the week it was. But they were telling us, the mainstream was telling us, Joe Biden is fine. Joe Biden is sharp as a tack. I'm comparing today's administration's levels of propaganda on par with the Biden administration. This is epic levels of propaganda, guys. All right. And that's why we're seeing markets not believing anything that's coming out of Trump's mouth. And we're seeing it reflected in the price of oil. All right. Now, I want us to have a look at the world map. All right. Let's go on Google Earth. Let's check out geographically speaking why the Strait of Hormuz is so important, ladies and gentlemen. All right. For those of you that are not in the know, for those of you that have been living underneath a rock, all right. Um, if I'm in the USA, all right, let's check. Let's check the USA. So if I'm leaving, let's see, where are we here? If I'm leaving off of the coast of no, that's Quebec. Fuck. All right. If I'm leaving the coast of Florida, right, and I wanna take my goods or whatever, and I'm exporting from Florida, and I want to take something towards, let's say, India. The path of least resistance is to go straight from Florida, navigate through what looks like Morocco. Am I correct here? Through the Strait of Gibraltar. We'll go through that narrow corridor right there. Then we'll go right through to the Mediterranean Sea. Let me just zoom out. And then we're going to go right through to the corridor in the Suez Canal. All right. That's the path of least resistance. We'll exit the Suez Canal into the Red Sea. And from the Red Sea, we'll go into the Gulf of Aden. And that'll bring us right through onto the Gulf of Oman and the Arabian Sea. And that's when we can get our goods and products to India or back and forth. Now, if I'm in the US, I'm looking to get oil out of Kuwait. It's going to take a similar route, ladies and gentlemen. I'm going to need to get it out of the Strait of Hormuz, boom, out of there, boom into the Red Sea, Arabian Sea, into the Suez Canal, right through Cairo, and back to North America. You feel me? Now, the reason why the price of oil is surging, ladies and gentlemen, is because right now, these corridors are currently under threat. The Strait of Hormuz has effectively been blocked by Iran, right there in that narrow 32-kilometer passage. Now, what's happening in as far as this week is concerned, we've got the Houthis, ladies and gentlemen. The Houthis. All right. The Houthis are threatening to block the Suez Canal, not the Suez Canal, but the exit in the Suez Canal going into the Arabian Sea. So we got the Houthis bombing Israel. We got the Houthis threatening to escalate and join Iran by effectively blocking ships in the Gulf of Aden, which is going to spill over from the Red Sea into the Arabian Sea and give you access to India, Europe, etc., etc., etc. All right. Now, if we block these two passages, ladies and gentlemen, 80% of global shipping goes through these two straits. And as far as oil is concerned, we got about China gets 80% of its oil right through from the Strait of Hormuz. The US or globally, 20% of the oil globally goes through the Strait of Hormuz. But the strait, I mean, the Suez Canal is a completely different kettle of fish. All right. Even more, that number, that figure is exacerbated to a large extent. So if we do get some escalation from the Houthis and they start bombing ships coming out of the Red Sea, coming through from the Suez Canal, then, ladies and gentlemen, I think we could be sitting here looking at oil that could be touching well above the $150 handle. All right. If the Suez Canal or the Red Sea gets effectively blocked, ladies and gentlemen, we can start pricing in $150 to $180 oil. And that is a complete catastrophic disaster. All right. On the war front, it'll be disaster for the US because it'll be a bad look. Iran doesn't need to win this war. Iran just needs to hold on. That's all they need to do. They just need to make the US look bad. They need to make the US look like there is no solution. That's all they need to do to win. But the US has a higher bar for victory, and their bar for victory, regime change, um, unblocking the Strait of Hormuz. There's a demilitarization of Iran's nuclear arsenal. All right, so there's a lot of there's a plethora, there's a shopping list that the US is looking for in order to look like they came out dominant in as far as this war is concerned. And that's why the price of oil is the pressure point. That's why the price of oil is a strategic pressure point for Iran because the whole world is going to feel pain the longer this war goes on. And the longer this war goes on, the more people start looking at America like, yo, what are you doing here? What are you doing? You feel me? And what are you doing? And questioning Donald Trump's ethos when it comes to this whole war. And Pistol Pete Hegseth. I don't know if you guys know Pete Hegseth, but yeah, that guy's just he's unchained. He's I think let's just say we're not in Kansas anymore. All right. It looks like he's auditioning for a role in Top Gun, with these daily press briefings where he's coming out as a blatant warmonger. All right. But alas, my job here is not to be partisan. It is to be bipartisan. I just call strikes and balls, ladies and gentlemen. I have no dog in this race. I'm just calling strikes and balls. That's it. All right. Strikes and hits, rather. Anyway, getting to the oil narrative, let me just lay it on you real quick. And as far as oil and inflation, that's the real story. All right. Oil held its strength into the session, guys, and that's the real problem. We're trading right now at the time that I'm speaking to you. Oil is sitting at $102 a barrel. All right. We're above the $100 mark again. And what we can expect henceforth, elevated oil means one thing and one thing only. Inflation is not going away anytime soon. Right now, as I speak to you, CPI is sitting at 2.4%, but the core figure is sitting at around 3.1%, the 3% to 3.1% handle. And we all know the Fed's target is 2%. Now, here's what I submit to you, and it's the hard truth that we all need to accept if we're going to make money in this market trading gold. Okay? The longer this war drags out, the higher inflationary expectations go. The higher inflationary expectations go, the further back interest rate cuts are pushed down the road. As I'm speaking to you right now, our first interest rate cut that we're expecting in the year 2026 was supposed to be mid-year, around June, July. According to the summary of economic projections as laid out by the Federal Open Market Committee meeting, Jay Powell, too late Jerome, if you like, has pushed that now back to September. So we went from expecting 2 to 3 interest rate cuts for the year, which is the reason why gold has been accelerating. And now we're down to pricing in only one interest rate cut, and that's in September. And that's if it comes. All right. Right now, we're sitting at a juncture where the longer this war goes on, the longer the Strait of Hormuz is closed, the higher oil climbs, the more we begin shifting the conversation from are we getting one cut to are we getting a hike? You feel me? That's where we're at. You get me? So for the Fed, this is looking pretty precarious right now. It is squeaky bum time, and that feeds straight into gold. I said the one weakness that gold has during periods of geopolitical instability, the safe haven quality goes away as soon as oil comes into the ether. All right. It is the one weakness that gold has during times of instability. During times of instability, yes, gold straight buy, close your eyes. You feel me? But if we start adding inflationary concerns as a result or end result of the geopolitical instability, that then weakens gold substantially. And now we're sitting at a juncture where gold is under pressure. And that's what I want to do right now. Let me pull up a gold chart right now. But before I do that, let's quickly analyze oil. All right. We moved down aggressively. We've got an aggressive move to the downside from $120 a barrel all the way down to $76 a barrel. And then we since then quickly went back up and we set a new higher low. And we see that over here. Here's our first low around the $72 mark. And then we went all the way to the $102 barrel mark and retested around the $84 mark. The 84 is our new higher low. And what we need to see is a break above 104. Ladies and gentlemen, if oil breaks above the 105 handle, good God, I think that that sets the runway clear and we could find ourselves retesting the 102 handle again and moving promptly towards 118, 120 again. Also, this is a headline trade. So if you're going to be trading oil, I advise you to keep abreast of the news cycle. All right, this is a breaking news story. This is a breaking news trade. So the more escalation we get, the more oil goes up. De-escalation, oil goes down. This is not a price action trade, ladies and gentlemen. Yes, you can use price action to time your participation in this trade. However, you can't use price action to navigate this whole war. No, you're gonna get cooked. You feel me? You're gonna get absolutely cooked. So if you're gonna be trading oil in this kind of environment, I implore you to keep abreast of the geopolitical developments, and that means you're gonna be having to watch a whole lot of news, boys and girls, a whole lot of news. You feel me? Now, let's quickly move away from oil and let's go to the yellow metal, my favorite pair to trade. All right. This is the only thing I trade, by the way, ladies and gentlemen. I only trade gold. Gold melted after the FOMC. All right. This is the FOMC move. We went from $5,100 an ounce all the way to $4,100. So essentially, after FOMC, in the 3 or 4 days afterwards, gold lost $1,000 from its valuation. Then we got that tweet coming out from Donald Trump or Truth Social. I don't know who the hell is on Truth Social. Like, come on, guys, that's so fringe. Anyway, we got that Truth Social post, which made gold rebound from 4.1 all the way to $4,500 an ounce. And that is what's keeping it elevated right now. However, I have told you that since then, markets have gotten, how can I put it, accustomed to Donald Trump's cap. All right. We're calling cap on all tweets. We're calling cap on all statements because, like I said, Iran is denying any negotiations. They're saying, nah, this man is negotiating with himself. This man is playing 6D chess. This man is Delulu. You feel me? All right. Here we have an article from Newsfeed on Al Jazeera website saying Iran's foreign minister denies claims of US-Iran negotiations. That's today. That's today. Man is speaking to himself. Chat. Donald Trump is speaking to himself, according to the foreign minister of Iran. All right. And if they are negotiating, why have the US and Israel bombed more than 75 Iranian police facilities today? You feel me? So there's a lot of propaganda here, guys. Again, I go back to the example that I used that the previous administration, the Biden crime family, all right? The Biden crime family tried to gaslight us into thinking that Joe Biden was there mentally. Joe Biden was cooked, guys. Joe Biden has been cooked. All right. Joe Biden didn't know what week of the day of the week it was. Joe Biden needed to be reminded that, yo, you're the president, bro. You need to make the decision. You feel me? So the mainstream media tried to gaslight us going into the 2025 election that Joe Biden was mentally fit, physically fit, and that there's no signs of early onset of Alzheimer's, right? Which is clear as daylight to see. We could all see that Joe Biden's mata is fried. Joe Biden was cooked mentally, yet the propaganda machine from the mainstream media wanted us to believe that he was fine. And that's what I believe is happening right now. We've got epic proportions of gaslighting happening right now. We've got epic proportions of propaganda. I like to call it slopaganda because this is just media slop. They just want us to eat it up. Like, here, here's some slop for you today. Here's your daily dose of slop. Eat it up. Eat it up. So this is slopaganda, guys. This is epic proportions of slopaganda, and it's clear to see because of what Iran is saying. Iran is saying, man is negotiating with himself. Man is playing 6D chess. All right. There's some of the quote that I read the other day, some of the tweet from the same foreign minister saying that the goalposts have shifted. Now America sees victory as opening the Strait of Hormuz. But the Strait of Hormuz was open before the war began. So what are we doing here? Like, what are we doing here? Anyway, having a look at gold. Currently, we are sitting at $4,500 a barrel. I mean, not a barrel, I'm thinking about oil per ounce. The path of least resistance, I see a move up to 4,700, temporary counter trend move, and that'll bring us to the 4-hour previous lower high, this level right here. And that's where I believe that market's going to rotate to the downside, particularly if there's an escalation this week. All right, we could move from 4,700, and our first target from there onwards would be maybe a move to 4,300, which will then have a temporary counter trend move and then slide back down to 4.1. And that can be our first or second target if you're going to be a seller in this market. I'm bearish on gold so long as the war continues. That's my personal opinion. Not telling you what to do with your coins. That's your responsibility. What else do I have on the back burner? What else do I have on my docket? What news do I have on my desk? Let's chop it up. Let's chop it up. Let's chop it up. All right. All right. So gold, guys. Here's my caveat on gold, right? You'd expect gold to rally hard in this environment, all right? Everybody and their mother and their cat would be buying gold in this kind of environment, all right? War, uncertainty, risk, textbook bullish scenario. But nuance, guys, nuance and context matters, all right? Instead, gold is struggling to gain traction. Why? And that's because rising yields are suffocating it, guys, all right? US government bond yields. Yields are rising. And the reason why yields are rising is because of inflation expectations, which then increase the likelihood that the Fed is going to remain higher for longer on their interest rate stance, which is what is directly tied to the bonds. You feel me? And whenever bonds go up, gold goes down. That's the relationship, right? It's not rocket. No, it is rocket science. I'm lying. Nah, I'm capping. I'm capping. It took me a while to learn this. All right. This is not something you can buy off the shelf at Checkers. This is not something you can buy off the shelf at Woolies. You need to do the hard yards. You need to see the action reaction function over a large course of time, over many geopolitical situations, over many macro data situations to be able to see what is affecting bonds. And when bonds rise or when bonds fall, where does the money exit or where does the money go? Right now, bond yields are rising. The money's exiting from gold and going straight into bonds. That's the reason why we are seeing an epic correction on the S&P 5, on stocks broadly, Dow Jones, NASDAQ, in correction territory. That's because all the money's flowing right through to government bonds. Thank me later. All right, what's next? What's next? What's next? Let's cook. Let's operate. All right. In closing, when it comes to gold, though, right now, guys, gold is not trading on fear. All right. It is trading interest rates. And that shift is catching a whole lot of traders on the wrong side of the coin. All right. Everybody's trying to be bullish on gold. Nah, 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 nah. This is not a geopolitical trade, my boy. This is not a price action trade, my nigga. Nah. This is an interest rate trade. This has become a macro story. This is a Jerome Powell situation now, right? Does the Fed step in and drop rates? But how can they drop rates when we've got the Strait of Hormuz closed, oil rising, adding to inflation? Come on. Action reaction function, ladies and gentlemen. We can do technical analysis until we blue in the face. You can draw your double bottoms. You can draw your trend lines. This is a macro data trade. This is an interest rate trade. This is a headline trade. All right. You need to be watching the news for this now because signs of de-escalation is what's going to make gold go up again because then we can start pricing in interest rate cuts. But the longer this war drags on, the longer the strait is closed, the more oil keeps climbing, gold is cooked, falling off of the bone, medium tenderism. You feel me? Now, let's talk about the quiet winner, which is the US dollar, guys, because while gold hesitates, the US dollar is doing what smart money does. All right, let's open the DXY, ladies and gentlemen, and let's peep it closer. The DXY, ladies and gentlemen, has officially smashed through the 100 handle. And I've been talking about this, guys. If you go on my YouTube, we were here. We were sitting at the 95 handle when I made a declaration that this is just a liquidation move. And after we tapped 95, which represented like a 5-year low for the US dollar, I mean, it's not rocket science. If you look at the rand to the dollar exchange rate, we were touching 15 something. It made sense that this is the time for you to be buying US dollars if you were having rands because it's it's a 4-year low. It's the cheapest dollars have been. And it made sense that from the 95 handle, the dollar would then strengthen. That was before the Iran war. This was just from a psychological point of view. All right. Then we had the war. All right, which then drove all that safe haven assets into the DXY and into the dollar. And now, ladies and gentlemen, we are punching above the 100 handle. We are about to create a new high. All right. And in relation to how long this range has been holding, uh, nuance matters, caveat. All right. Context matters. We've been stuck below 100 since last year, July, ladies and gentlemen. Since last year, August, July, we've been trapped below 100 on the DXY. And today we are finally breaking out. So this says one thing to me: troops, boots on the ground. All right. We've got the airborne, the military, what is it? The 82nd Airborne, 82nd Airborne Division. It's paratroopers from the United States. They were on their way over the weekend to Iran. We've got the US Navy fleet. That's on their way to Iran. So it's giving boots on the ground. Boots on the ground means escalation. Escalation means dollar on the front foot, gold melting, oil through the roof. It's as simple as that, ladies and gentlemen. I can't simplify it anymore. I mean, I could, but I'd be spoon feeding you at that point. And nah, 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 nah. Nothing's for free. No free rides. Gas or you'll finish the next sentence. No free rides. Gas or starts with an A and it rhymes with glass. Somebody finished the sentence in the chat. No free rides, ladies and gentlemen. It's either you're going to pay gas or you feel me. So yeah, I'm not going to spoon feed you. I'm just going to point you in the right direction. You will do the rest of the due diligence by yourself. Shout out to my nigga Amar in the chat. Shout out to Amar. All right, let's wrap this up. Let's wrap this up. Let's wrap this up. Let's wrap this up. Because we've got something really important that we need to be looking out at this week, ladies and gentlemen. We've got the jobs data. All right, in and amongst all the stuff that we have to navigate, we've got NFP to negotiate, ladies and gentlemen. All right, so you're still gonna get cooked some more, unfortunately for you. I'm joking. I'm joking. I'm joking. You're not gonna get cooked. You're riding shotgun with me, so you're not going to get cooked. All right. We're checking the lay of the land. We're scanning our surroundings before we enter the market. So tomorrow we've got US jobs job openings. We've also got on Wednesday the ADP employment change. Big one on Wednesday, retail sales, ladies and gentlemen. We need to see what's happening underneath the hood of the US economy. And that'll take us straight into Thursday, where we've got initial jobless claims, and it'll culminate in Friday with the jobs data and the unemployment rate, which is undoubtedly the big catalyst. Now, the reason why I want to point your attention towards NFP, it matters more than most NFPs, guys, because under the hood, the US jobs market is getting cooked. All right. Last NFP, ladies and gentlemen, the data lost 92,000 jobs lost in the US economy. It didn't add any jobs. They lost 92,000 jobs. And the consensus last month was that they would add 59,000 jobs. So we're looking at the NFP data with even more uh, vigor, for lack of a better word, this month because it's gonna determine, not determine, but it's gonna put the Fed in a really tough position. I mean, think about it this way. We're bleeding jobs, which means I need to stimulate the economy. And by doing that, the only way I can do that is to cut rates. But if I'm Jerome Powell, how can I cut interest rates if I'm going into an environment where oil is at elevated levels? That's going to create more inflation. I don't know how long this war is going to last. So how can I responsibly cut rates? But I'm bleeding jobs. So damn, Jerome Powell is going to earn his salary at the next Fed meeting, which is in 30 days from now on the 29th of April. And as it stands, we're sitting at a 99% probability that interest rates are held steady at the current level. Long story short, higher for longer. Higher for longer. I don't see a cut, guys, being priced in. In fact, we're sitting at a 0.5% probability that we get a hike instead. And this same probability was sitting at let me check, a week ago. Where were we sitting a week ago? Well, a day ago, we are sitting at 4.4% that would hike at the next Fed meeting. A week before, we're sitting at 6.2% last week. That would be hiking rates. And and easing, the probability of easing, ladies and gentlemen, getting interest rate cut in the next 30 days on the 29th of April is sitting at a 0.0% probability. It doesn't get no lower than that. Mathematically speaking, we're cooked. Gold, cooked. Hence why I keep saying that temporary counter trend move back up to roughly 4,500, 4,700, and then we're going to melt again to 4.1. And that's pending an escalation. Also, if we get a decent jobs number on Friday, that'll alleviate the pressure to be cutting unnecessarily. If we get a decent jobs number above 50K, 70K, then there's no reason on the jobs front for Jerome to cut because we're not seeing an unemployment recession. You feel me? And that'll price in the higher for longer stance, gold to the floor, cooked, cooked, off the bone, lamb curry, absolutely cooked. All right, ladies and gentlemen, yeah, I think that's it for today. There's nothing left for us to really discuss pursuant to this. We just need to keep watching the headlines. Like I said, if you're trading oil, if you're trading gold, if you're trading anything that's linked to the US dollar, you gotta be abreast of the news cycle because basically we need to have our heads on a swivel. This is a fast moving news cycle. All right. Lover bands just joined. You're cooked as well, bro. Down to the bone marrow because I just dropped some heavy bombs and you just missed the signal. Again, I always say my job here is to separate the signal from the noise. And we do that by understanding what the news means for the financial assets we're trading. You need to understand the action reaction function. The news creates your double bottom. The news creates the trend line breakout that you're looking at. You feel me? So if you're just looking at price action and patterns, you can do that until you're blue in the face. You'll always be lagging. The direction is determined by the fundamentals, and that's what I was operating today. You feel me? So, with that being said, ladies and gentlemen, I think it's a wrap, and I bid you farewell. Adios.